Mr. Chief Clerk.
Mr. Speaker, engrossed House Bill 1223 was introduced by Representative Doctor and other House and Senate sponsors. Engrossed House Bill 1223 is a bill for an act to amend and reenact Section 57-38-30 and subsection 1 of Section 57-38-30.3 of the North Dakota Century Code relating to corporate and individual income tax rate reductions and to provide an effective date. Mr. Speaker, this says a fiscal note prepared by the Office of the Tax Commissioner. Their analysis indicates a reduction in general fund revenues of $152 million. Mr. Speaker, your Finance and Taxation Committee recommends amendments which are passed the previous sixth order. When so amended and engrossed recommends do pass on engrossed House Bill 1223 by a vote of 10 yeas, 4 nays, and 0 absent not voting. Mr. Speaker.
Representative Hedlund.
Thank you, Mr. Speaker, members of the Assembly. Your Finance and Tax Committee, by a 12-4 vote, asked for a due pass on House Bill 1223. Now, in committee, we heard several bills relating to rate reductions of individual and corporate income taxes. And after thorough consideration, Mr. Speaker, we found 1223 to be the most viable option with our current revenue projections. If I can or may, Mr. Speaker, I'll just quickly walk through the bill. Section 1 provides a 10% reduction in corporate income tax rates. Section 2 provides a 10% reduction in individual income tax rates. At the same time, compresses the brackets from 5 to 4, and for the first time in the history of income tax collections in the state of North Dakota, the top rate would be below the 3%. Section 3, Mr. Speaker, is just the effective date, stating that it will go into effect if signed into law for the 2015 tax year. May I continue, Mr. Speaker?
You may.
Mr. Speaker, members of the Assembly, economists, business owners, and taxpayers across this country agree that taxes have an adverse impact on economic development, and they create a barrier between work and reward. When we tax income, investments, corporate profits, and the like, we are essentially punishing individuals and corporations for doing productive work, making smart investments, and running successful businesses. Now, prior rate reductions and other factors have all contributed to the booming economy that we see in this state. But, however, there's been a study that's been completed by the Organization of Economic Cooperation and Development, and it showed that across this country, corporate income taxes continue to be harmful to economic growth. The number one harmful thing when you're trying to create economic growth. And they are followed closely by individual income taxes. So North Dakota has consistently ranked in the top 5 states for its economic outlook and prosperity. And we currently have strong ag and energy industries that contribute significantly to our economy. There's been hundreds of new businesses and thousands of people that have flocked to North Dakota because of our business climate. But further rate reduction is needed. We've got declining commodity prices both in the energy and the oil sectors, and reducing rates will help bring those young people and keep them here, because that's what we need. We need people to fill these jobs that are available here. Mr. Speaker, as I speak, there are several states across this country that have rate reduction bills before them, either filed or they're in consideration. In 2013, 17 states, including North Dakota, reduced rates, and I think we've seen the impact of that here. Also, just last year, while we weren't in session, I believe another 14 states reduced income tax rates. So again, Mr. Speaker, members of the Assembly, your committee found that this was the most viable option moving forward, as it would be easily adjusted either up or down to help us meet our revenue projections and our state's obligations. So with that, Mr. Speaker, members of the Assembly, I ask you to vote green on this bill and support your committee. Thank you, Mr. Speaker.
Representative Casper.
Thank you, Mr. Speaker. Would the bill carry yield to a question?
Representative Hedlund will yield to a question.
I'd be happy to.
Representative Casper.
Thank you, Mr. Speaker. Representative Hedlund, you indicated in your remarks that you found this bill to be the best bill. and you indicated that other bills had different variations. I'm wondering, in this particular bill that the committee supported, are the tax reductions being given sort of equally across the board in the tax brackets and the income brackets, as opposed to focusing more on giving lower tax brackets a greater reduction as opposed to the higher tax brackets?
Mr. Speaker, Representative Casper, if I did say that what I meant was this bill, I think, was the most easily adjustable bill, and that's why we favored it. But this bill does more equally distribute the tax relief amongst all brackets versus some of the other bills that were targeted either towards a flat rate or for bigger reductions at the bottom end of the rates, and that is something that the tax committee in the past has not really favored.
May I continue, Mr. Speaker?
Go ahead, Representative Casper.
Thank you, Mr. Speaker. Thank you, Representative Hedlund. Assembly, I'm going to support all the tax bills that are coming up because, frankly, as the process goes on, who knows what the Senate's going to like and what they're not going to like. But the point I want to make is in income tax policy and income tax reductions, I, for one, favor helping our lower income people more than our higher income people. It's not that I dislike higher income people. I hope everybody is in a higher income tax bracket. However, we have folks who are retiring, and that's generally when their incomes go down. And so if we can do more to help the lower income people as they retire to stay in their home, we hear about how bad property taxes are and how escalating they are. I would certainly like to see a broader reduction for the lower income brackets than the top income brackets. I'll support this bill as well. Thank you, Mr. Speaker.
Representative Holman.
Thank you, Mr. Speaker. Excuse me. Will the bill carrier respond to a question?
Representative Hedlund, will you yield the question?
Yes, Mr. Speaker, I will.
Thank you, Mr. Speaker. Representative Hedlund, in your committee discussion, and since we also are talking about significant property tax relief, did you weigh the effects of this legislation along with the other legislation that is coming forward related to property tax relief? Was that balancing act part of your discussion? Thank you.
Representative Hedlund.
Thank you, Mr. Speaker, members of the Assembly. Yes, the whole package has been part of the discussion in your Finance and Tax Committee. But I think we feel it's important that as we move forward, with the uncertainty involved with our revenues, that we keep, one of the bills alive. And because this one is easily adjustable, we thought this is definitely the one that we wanted to move forward with. However, we understood and, we fully knew that we had already passed a bill that continued the 12% property tax reduction along with, what's been put into the education funding formula. So, yeah, we were aware of it and we considered it.
Is there further discussion? Representative Onstead.
Thank you, Mr. Speaker. The bill carrier opened up the remarks saying this bill was the best match for our revenue forecast. Well, I guess the only match that it has is because our revenue forecast is going down, and so we're going to further cut revenues down. That, to me, I think is the only match that we have. We're going to take up in the next couple days appropriation bills. We took up a bill last Friday. It was probably the best bill that we could turn out with the revenues coming in. And so to further look at cutting revenues, when we know that we're going to leave critical needs probably on the table, even right here today. We're making a major cut to Department of Transportation, infrastructure. We're limiting funds that are going to go out west. We're going to look at higher ed projects. We're probably going to reduce those. We're going to look at FTEs. We're going to make that reduction. So is this the time to lower revenues? It's also common is that we're going to get these dollars to, assuming that they're going to come right back into our state's economy. We have an opportunity here, and that's why businesses started here, not because of our current tax structure, it's because there's a wonderful opportunity in North Dakota. We had high commodity prices in both ag and the oil industry, and that's why they came. Now, to assume that a corporate tax break is going to directly, dollars come right back into job creation is about the market. They're market-based, an opportunity that has. It has, think if we're going to give $25 million reduction, $25 million worth of jobs are going to be created. That just simply is not true. And so, Mr. Speaker, and ladies and gentlemen of the Assembly, we have a time to make a decision, and we're making decisions every day about projects going across the state. And so I don't think at this time is the best time to look for us to really reduce revenues at this stage of the game. So, Mr. Speaker, I hope we can defeat this bill. Thank you.
Representative Ruby.
Well, Mr. Speaker and members of the Assembly, one of my problems that I've had many times with bills, with the fiscal notes on bills like this, is it really just looks at the reduction of those taxes and makes it look like a zero-sum game. It really isn't a zero-sum game when it promotes economic activity. As Bill Carrier mentioned, other states are looking at this because they do realize that they need to spur economic activity and development in their state, and one of the hindrances is a tax. So when it comes to the business side of it, you can't necessarily quantify in a fiscal note the direct benefit, but we have history showing this in our state. As we've reduced our income tax, our income taxes have went up. The revenues from those taxes have increased. When you look at the individual reductions, now you have more money in people's pockets. They do stuff with that. Either they put it in savings or investments for college or for their retirement, or they buy things that they would like. And when they do that, there's other activity that is generated and also other taxes that are received, mainly the sales tax. So I think this is a good approach. I think we've done it, we've shown in the past that it's the right direction to go, and I hope we can continue it. I would strongly suggest a green vote. Thank you, Mr. Speaker.
Representative Hedlund.
Thank you, Mr. Speaker, members of the Assembly. And I don't want to get up and belabor the point, but let's look back. Our committee, this body, we've provided rate reductions every biennium since 2009. And what has been the occurrence? What happened when we did that? Revenues always went up. We had more money to spend. More money to spend on programs that we need here in the state of North Dakota. One thing that hasn't changed, though, is the argument against them. It's the same argument we hear every biennium, and I think the evidence suggests that it's not a good argument. So I would ask that we pass this bill, forward it to the Senate, and move on. Thank you, Mr. Speaker.
Representative Glassheim.
Thank you, Mr. Speaker, and Mr. Speaker and members of the Assembly. You know, down in appropriations, we've been cutting madly. We come in the morning with our knives and we cut. $400 million short on roads from what we would like to have, think we need. 10 to 20 million short on housing that we think we need. 5 million out of the judiciary budget. As you heard before, a whole number of smaller bills with 100,000, 80,000, 120,000 cut because we don't have the money. Now, I approve of these cuts. I voted for them. I had to turn in my progressive credentials. Whoa, it's me. But I voted for it because I know how to add and subtract. And we are now at crossover somewhere between $500 million and $1 billion upside down. Now, we'll make it up, we always do, something will happen, we'll have a new forecast, we'll cut more, we'll cut less, all of that. But here's $152 million that we want to give away that we don't have. We're already minus. Why would we give away? Now, when you make cuts in taxes, when you have a surplus, gee, that makes sense. People expect it, they look for it, they say, well, you have extra money, let's give some of it back to us. But when you don't have extra money, why would you make cuts in taxes? Why would you give back resources that you don't have? So, ladies and gentlemen, I think we really ought to vote this down. We ought to be responsible managers of the resources we do have, and not be giving back potential income. Thank you.
Representative Guggisberg.
Thank you, Mr. Speaker. Mr. Speaker and members of the Assembly, I just had to open up my red book here because I was hearing numbers being thrown around. And it appears to me that in 2013, we collected $618 million in individual income tax. In 2014, it was $516 million. So it is going down as we reduce these rates. And I would guess if we left them the same last session, they would be going up. As has been said before in the Appropriations Committee, we're making some tough decisions, and some things that I would really like to see funded have been cut, and some things that all of you would really like to see funded have been cut. But when we talk about tax cuts, I think we all, or those of us that just finished an election, heard one tax over the other. And that was the property taxes. And I looked up, if you want to follow along in the red book on page 8, they have tax rates for individuals or families making $25,000. They pay $1,030 a year in property taxes and $5 in income taxes. If you make $50,000 a year, you pay $2,200 a year in property taxes and less than $300 in income taxes. And if you make $100,000 a year, you pay almost $4,500 in property taxes and less than $1,000 in income taxes. So I think if we want to set our priorities like we are in the Appropriations Committee, we should set our priority to property tax cuts and forget about the income tax cuts, and we'll see. We'll see when the projections come back in March if we can afford these. I think we should vote red on this bill and take another look at it later in the session. Thank you, Mr. Speaker.
Representative Kelch.
Thank you, Mr. Speaker. I'm not on the Tax Committee, I'm not on the Appropriations Committee, but when we go around at our forums at home, the one thing we hear is we don't need another income tax cut. What they're concerned about is that 2009 was mentioned. We maybe had some over 100 rigs drilling out in the west, and we went up to over 200. Now we're dropping back off. We had $110 oil. Now we got about $50 oil. We had 7.25 corn. Now we got about $3.23, $3.25 corn. We had beans at $15. Now they're about 8 or 9. What concerns me is what's going to happen in the future. Maybe in this coming biennium, there's a possibility we could get by with what we're doing with the cuts that's been talked about. Some of them are more serious cuts than we realize. But what about the next biennium? Are we going to go back if agriculture commodities, oil prices stay where they are, drill rigs leave the state, and say, are we going to raise those? That'll be much tougher than what you realize it is if you start thinking about increasing those types of taxes. The big thing is, though, nobody Nobody we talked to, when we were at Farm Bureau meetings, we've been at Farmers Union meetings, we've all different, across the spectrum of people, and they're not concerned about income tax cuts. They're concerned about the programs, infrastructure, and the things, school funding, and property tax reduction is their biggest concern. So I would urge a no vote on this. Thank you, Mr. Speaker.
Representative Carlson.
Well, thank you, Mr. Speaker. We've had kind of an interesting discussion of economics. And obviously there's 2 points of view about the value of tax cuts. And there's been a lot of discussion about their giveaways. And sometimes we have to remember it's not our money. It belongs to the people. We took it out of their pockets. We are stewards of that money. And let me tell you that there were comments made about tax policy. Well, tax policy does drive the economy. And tax policy is competitive from state to state. We had an opportunity, and we've discussed over the time tax policy dealing with oil. And we made the decision to leave it alone and to leave the triggers in place. And today there's some people saying, wow, we should have done something with tax policy, because if both these triggers hit, we got a problem. And we do have a little bit of a structural problem. Other than the Department of Transportation, I've been looking around trying to find a budget that got less money than it got last time. And the reality is I haven't found one. We have reduced the increases to these budgets. We have not been cutting budgets. In fact, the overall budget, even with the new revenue forecast, is up $400 million over last biennium, and last biennium was plumb full of one-time expenditures. So our budgets are up. And people are making more money. And we like that. We want people working. We still got 20,000 plus jobs that are unfilled around the state. And somebody's paying income tax, because we're collecting almost $1 billion of it in the biennium. And it's amazing. It's almost the same number as before we lowered it, $250 million. So something's happening out there. I think part of the package as we manage this place and manage a resource is to do a lot of things. First one is fund your priorities. There's a bill coming to us with over $2 billion in it, K-12. That's not cut, that's up. That's a lot of money. Over 80% that we've committed to, and we will stand behind our commitments. We passed $1.1 billion out here last week. The largest single non-appropriation bill, by the way, that I ever remember leaving this chamber. And we passed it out knowing full well that it didn't leave much for reserve when we got done. But we did it because there was a need out there. But returning money to the pockets of the taxpayers is good public policy. I can't remember the exact session, but Senator Nelson in the Senate and myself sponsored a bill to decouple us from the federal income tax, because it was 14% of your federal encumbrance. It was easy to fill out your tax form. Just take 14% times whatever you paid the feds, and that's what your state tax was. We couldn't even be having this discussion today had we not done that. And it was good public policy back then to separate and to start lowering our tax burden to our citizens, and it's good policy today. As far as property tax, if you want to have that debate, I'll be glad to have that debate, because we have committed an additional $715 million this time to K-12 funding, plus 12% at about $250 million, which, by the way, are both in the budget today. And yet we're still saying everybody saying, well, everybody hates it at home. Well, maybe the people at home start to listen a little bit better than they're listening when it comes to the reason for our property taxes escalating. So I think it's good policy at this point in time. 10% isn't much of a decrease for our citizens. It's their money. Let's return to their pockets.
Representative Onstead.
Thank you, Mr. Speaker. You know, yep, this is about tax policy, and it is about returning money to the people and getting a bang for the buck. But those people at home, they want to know that the Department of Health is carrying out the full regulations. They want to know that Oil and Gas Division is monitoring those wells out west. They want to know that they have safe streets all across the state of North Dakota. They want to know that if the drug and trafficking in our courts, our jails are busting at the seams. And so we're talking about early release programs. So also those people at home, it is their money that they want the best bang for their dollar too. And if we're going to leave them and feel that nothing's changed and security and safety and environment and all those things along with it, and this is what we have today. Since 2007, commodity prices have been going up. And when you look at the ag and the oil production, that production has been going up per well because of technology. A bushel of acre of corn 5 years ago, they get more now because of technology and development and so on. And we've made those investments into those entities. And it's a little bit about investments back in that creates that part of it. But now we're at a point where those commodity prices, and North Dakota is dependent, 68 to 70% of North Dakota's economy is dependent on that commodity price. And that commodity price is going down, both in oil and ag. It's mentioned that earlier. And so if we're going to relate that back to and now say, okay, let's return those dollars, and then let's not have safe streets. I beg to question that, and I think we should vote this down. Thank you, Mr. Speaker.
Representative Carlson.
Thank you, Mr. Speaker. We can debate the budget if we want, but I would care to wager that everything that Representative Onstad just said, we've added more people in public safety. We've added more people in the health department. We've added more people in the industrial commission. We've added more law enforcement. We are not shortchanging any of those things in this budget. We've made them a priority, and I think that another priority is to keep lowering those tax rates to our citizens.
Is there further discussion? The House has before it for final consideration House Bill 1223. The clerk will open the key and you may record your vote. Has every member voted? Does any member wish to change their vote? Representative Scarpold? The key will be closed and the clerk will take the record. The record shows 67 yea, 25 nay, 2 absent not voting. House Bill 1223 is declared passed. House has before it House Bill 1296, which has been read. Mr. Chief Clerk.
Mr. Speaker, House Bill 1296 was introduced by Representative Kay Koppelman and other House and Senate sponsors. House Bill 1296 is a bill for an act to amend and reenact Section 57-38-30.3 of the North Dakota Century Code relating to individual, estate, and trust income tax rate schedule replacement with a flat rate income tax and reduced North Dakota taxable income amount subject to the tax, and to provide an effective date. Mr. Speaker, this has a fiscal note prepared by the Office of the Tax Commissioner. Their analysis indicates a reduction in general fund revenues of $292 million for the 15-17 biennium. Mr. Speaker, your Finance and Taxation Committee recommends do not pass on House Bill 1296 by a vote of 10 yeas, 2 nays, and 2 absent not voting. Mr. Speaker.
Representative Hattlestead.
Thank you, Mr. Speaker. Mr. Speaker, ladies and gentlemen of the Assembly, Finance and Tax Committee recommends a do not pass on House Bill 1296 by a vote of 10-2. 1296 relates to individual, estate, and trust income tax rate schedule replacement with a flat rate on income tax and reduced North Dakota taxable income amount subject to the tax. 1296 is considered both an income tax reduction and income tax reform. It represents nearly a $300 million tax cut and flattens the income tax to 2%, thus eliminating bracket confusion and providing a greater ease of administration. Current North Dakota exemptions are listed starting on page 4, line 5, and running through page 10, line 16. 1296 authorizes a deduction from income based upon filing status listed on pages 1, 2, and 3. House Bill 1296 lowers everybody's tax bill but corporations and reduces state tax revenue by approximately $300 million. The bill is effective after December 31st, 2014. Mr. Speaker, members of the Assembly, Finance and Tax Committee recommends a do not pass on House Bill 1296, and I would ask you to concur. Mr. Speaker.
Is there any discussion? The House has before it for final consideration House Bill number 1296. The clerk will open the key and you may record your vote. Has every member voted? Does any member wish to change their vote? The key will be closed and the clerk will take the record. The record shows 31 yea, 62 nay, 1 absent not voting. House Bill 1296 is declared failed. House has before it House Bill 1167, which has been read. Mr. Chief Clerk.
Mr. Speaker, engrossed House Bill 1167 was introduced by Representatives Lauger, Ruby, Thorson, and Toman, Senators Carlisle and Unruh. Engrossed House Bill 1167 is a bill for an act to amend and reenact subsection 1 of section 57-38-30.3 of the North Dakota Century Code relating to individual income tax rates and to provide for a contingent effective date. Mr. Speaker, this is a fiscal note prepared by the Office of the Tax Commissioner. The analysis indicates a reduction in general fund revenue for the 2015-17 biennium of $466,659,000. Mr. Speaker, your Finance and Taxation Committee recommends amendments which were passed on the previous sixth order. When so amended and engrossed recommends do not pass on engrossed House Bill 1167 by vote of 12 yeas, 0 nays, and 2 absent not voting. Mr. Speaker.
Representative Rosath.
Thank you, Mr. Speaker and members of the Assembly. House Bill 1167 is an income tax reduction bill that would reduce the tax brackets on individual income tax to 0. The bill does maintain an individual tax structure, so it could be, again, at some time, be reinstated if necessary. As amended, House Bill 1167 would allow an exemption to eliminating the tax if the large trigger on oil tax collections took effect. If the trigger goes on, an estimated it eliminates the 6.5% extraction tax, and House Bill 1167 provides for a 1% income tax if that trigger took effect. Due to the large fiscal impact of $973 million to the State General Fund, your Finance and Tax Committee on a 12-0 vote recommends a do not pass and ask that you concur. Mr. Speaker.
Representative Lauser.
Thank you, Mr. Speaker. And after nearly a year of this bill kind of being out in the public, it's probably not a lot left to say, so I'll try to reduce my remarks a bit. I'm of the opinion that a tax on income is a tax on productivity. Since our unemployment rate is so low in our state, maybe almost everybody could participate and benefit from this policy. I felt the tax code has picked winners and losers. Taxes are punitive. Government's tax activities they want to change, curb, or eliminate. We've seen that in this chamber with regards to the smoking tax, tobacco tax. Taxes get reduced to incentivize behavior the governments want to increase. For instance, the Housing Incentive Fund. In fact, New York State is advertising all across the nation about tax incentives and eliminations to move to their state. That's on the left. From the right, former Texas Governor Rick Perry is famous for traveling around the country recruiting businesses to his state based on tax policy. We've spent the previous 3 sessions reducing the personal income taxes while our budgets have grown dramatically. We have not eliminated brackets after decoupling from the state income tax from the federal income tax. A progressive system that requires different tax rates based on income makes no sense. This concept eliminates the need to determine who is, quote, entitled to a tax credit. It's not a short-term concept, it's a long-term strategy to allow our state citizens to share in the prosperity of our state without violating the state constitution's gifting clause. We can be an extremely attractive and competitive state for years to come if we could find a way to take the productivity tax to 0%. I was on a plane about a year and a half ago and sat next to a guy that was talking taxes and business climate and other issues. He was flying in North Dakota from another state. Over a year later, he learned of this proposal and emailed me, and in short, it said from his CEO of his company, this could make it pretty interesting to locate and headquarter in North Dakota as a C Corp. There was a lot more to the email that was fairly harsh and very descriptive of their state's tax policy is probably not appropriate for this chamber, but they were focusing their business and where they may relocate based on tax policy. I can't say how many other businesses might relocate to our business-friendly state, nor can I say how many businesses may start up or stay here. I don't know how many families might consider moving or staying in North Dakota, but I'm certain that this policy cannot hurt in any of those circumstances. This concept treats everybody fairly. It doesn't play class warfare, and it doesn't favor types of income. It actually rewards rather than punishes productivity. I've heard comments in this chamber, on this floor, a couple weeks ago, quote, "I understand our citizens want lower income taxes," and quote, "All of us have constituents that don't get tax relief." I don't buy the arguments that this will cost the state money, because a bill such as this will only have the impact of government having less money to spend. There are no costs associated with less revenue to the government. Long term, I'd like for the members of this body to consider that if you champion a renter's tax credit, or you advocate for the hardworking middle class, or you have introduced tax credit bills that have not passed, this concept is probably for you. I also realize the very real circumstances our state finds itself with in our revenue forecast, so an amendment was offered on this bill that addressed the large trigger. If the large trigger hits in the previous calendar year, the tax rate is whatever this body decides it to be. Perhaps it was House Bill 1223. I want to thank the Finance and Tax Committee for their willingness to add the amendment, and I would hope that sometime in the very near future we can achieve not only a single tax bracket, but a 0% rate for personal productivity taxes in North Dakota. Mr. Speaker.
Is there further discussion? The House has before it for final consideration House Bill 1167. The clerk will open the key and you may record your vote. Has every member voted? Do any members wish to change their vote? The key will be closed and the clerk will take the record. The record shows 23 yea, 70 nay, 1 absent, not voting. House Bill 1167 is declared failed. House has before it House Bill 1298, which has been read. Mr. Chief Clerk.
Mr. Speaker, engrossed House Bill 1298 was introduced by Representative Casper and other House and Senate sponsors. Engrossed House Bill 1298 is a bill for an act to amend and reenact sections 57-38-01.28 and 57-38-30 and subsection 1 of subdivision D of subsection 2 of section 57-38-30.3 of the North Dakota Century Code, relating to reduction of rates of individual and corporate income taxes and an income tax exclusion for Social Security benefits, and to provide an effective date. Mr. Speaker, this has a fiscal note prepared by the Office of the Tax Commissioner. Their analysis indicates a reduction in general fund revenue of $250 million for the 2015-17 biennium. Mr. Speaker, your Finance and Taxation Committee recommends amendments which were passed on the previous sixth order. When so amended and engrossed, recommends do not pass on engrossed House Bill 1298 by a vote of 13 yeas, 0 nays, and 1 absent not voting. Mr. Speaker.
Representative Kading.
Mr. Speaker and members of this Assembly, House Bill 1298 is a bill which the House Finance and Tax Committee heard and gave a do not pass vote by a measure of 13-0-1. This bill lowers income taxes for each bracket. Under this bill, personal and corporate income tax would be reduced by $250 million per the fiscal note. Regarding personal income tax, each tax bracket was given a lower rate. Each class bracket was adjusted upwards. By lowering rates and adjusting brackets up, the effect is to lower taxes for all brackets and incomes. The lowest bracket would be lowered the most. Corporate income taxes were also reduced for all brackets. As heard, 4 separate income tax reduction bills have been brought to the House, and not all can be approved in the end. The Finance and Tax Committee decided to give this bill a do not pass, as its fiscal note was significantly greater than the income tax bill. The committee decided to give a do pass recommendation. Mr. Speaker and members of this Assembly, I urge you to give this bill a do not pass vote.
Representative Casper.
Thank you, Mr. Speaker, members of the Assembly. Quickly looking at the bill we passed, 1223 and 1298, it appears to me that the major difference is in the income tax bracket, or the income tax on the lowest tax bracket. On the bill we passed, it had a 1.1 1% tax up to $37,000, and the bill before us, 1298, has a 0.7% tax on personal income. As I said in the previous comments, this bill provides greater tax relief for the lower income people, and I like that concept better. Hope we get some green votes. Thank you, Mr. Speaker.
Is there further discussion? The House has before it for final consideration House Bill 1298. The clerk will open the key and you will record your vote. Has every member voted? Does any member wish to change their vote? The key will be closed and the clerk will take the record. The final vote shows 19 yea, 74 nay, 1 absent and not voting. House Bill 1298 is declared failed. House has before it House Bill 1031, which has been read. Mr. Chief Clerk.
Mr.